Welcome to Drumbeats, the must-listen-to podcast which explains why Indigenous partnerships are the key to securing successful outcomes in natural resource and infrastructure investment in Canada. I'm Mark Magnacca, and today Rob and I are joined by Jeffrey Sear, founder and managing partner of Raven Indigenous Outcome Funds, the team pioneering outcomes-based financing in Indigenous communities. Jeff has built the first Indigenous-led outcomes investing platform of its kind, a model well worth looking into. One that blends government purchasing, community leadership, and private capital to deliver projects. For example, his team has launched a $50 million Indigenous Outcomes Fund, raising $20 million in its first close and raising over $30 million shortly thereafter, with capital already flowing into 7 to 10 projects across Manitoba, Saskatchewan, Alberta, Ontario, and Quebec. As an example, they've retrofitted 125 homes with geothermal systems, hired and trained local Indigenous crews to deliver the work, and generated 4% return delivered early to investors, a first of its kind Indigenous outcomes financing success. This will be a 2-part podcast. In this part 1, you'll learn how Jeff turned a problem into an opportunity. It's the origin story behind a model now scaling across the globe, including Canada. Let's dive in. Jeff Sear, founder and managing partner, Raven Indigenous Outcome Funds. Welcome to the podcast.
Thanks, Mark.
Good morning, Jeff. Thanks for joining us.
Yeah, I'm happy to be here. Gratitude for reaching out to have me on your podcast.
Why don't you tell us a little bit about your background? And now I understand you're in Quebec, and you can also please tell us about something you're wearing, because I think there's a good story there for our listeners.
Oh, yeah, sure. So Tanchi Ani Bojo. My traditional name is Kinukin and Inene, which is Eagle Man Leading. I'm from the Métis Nation of the Red River Valley, southern Manitoba. It's where my traditional territory is, and I traditionally harvest and go back there to do that quite regularly. And as Rob pointed out, I live now in Mont-Tremblant, Quebec. I went the other direction in my living choices. And I'm a founder and managing partner of Raven Outcomes, to short form, and CEO of the Raven Indigenous Impact Foundation, which is an ancillary arm of the work we do and an important part of the blended finance capital stack that we need to do in Indigenous communities these days. We can get into that if you like. Today, I'm actually wearing a traditional Métis beaded vest, which was done by my father, who was a Métis elder. He passed away last year. This is one of the heirloom I'm really bad at beading. I don't do that. My wife, who's also Métis from Saskatchewan, she beads, so she's picked up some of the artwork along the way. But it's important to me, and it's important when we have these conversations to make sure that we represent who our communities are and who we are in that space.
Yes.
Beautiful, Jeff. And tell us how you came to be CEO of the Raven Outcomes Fund. Tell us a bit about your background and what got you into the investment sector in the first place.
Yeah, great question. I wish it was a straight path and an easy answer, but of course it never is. Life doesn't play that way. I actually started out as a political economist and a negotiator. And I worked, on First Nations rights and land claims, and then on Métis rights and land claims, and did a lot of work in that space, leading negotiation teams and policy teams around self-government and self-determination, those things that were important. And that takes you back about 20 plus years ago that I started doing that. And then did a tour with the federal government where I was asked to come in and draft legislation and lead consultation, and then work on the implementation of Supreme Court decisions on a Fed, Prov, and Indigenous community level, so tripartite. I left there, and I'm going to try to make this brief for your podcast, to go work at what was then called the National Association of Friendship Centers as their CEO, and that's all the friendship centers in Canada who are in urban environments. There's about 110 of those, plus provincial associations. What I would call the really pointy end of the stick of service provision in Indigenous communities, really dealing with tricky stuff on the ground: housing, homelessness, food, jobs, you name it. And a wonderful experience for 7-8 years. But that's where the story of I take off into the investment space came from. I got out of the friendship centers, but while in the last couple of years I was there, I ran 2 Indigenous Innovation Summits, one in Winnipeg and one in Edmonton. And really what we're talking about is the social and financial innovation ecosystem that was burgeoning around the time of 2015, 2016, really at the end of the TRC report, right? The Truth and Reconciliation Commission in Canada, and looking at all these gaps that we had, socioeconomic gaps, capital gaps, you name it, it was all existing. And I'm sure you've heard this podcast before. And in that period when I left the Friendship Centers and we had these summits, a lot of Indigenous entrepreneurs and then communities approached me as a known sort of quantity, I think, in the ecosystem to say, hey, we're missing capital for X, Y, and Z, and in different forms. That's Indigenous friendly, that's somewhat patient, and is responsive to actual Indigenous needs. So it's not capital doing what capital wants to do, just being extractive of profit, but capital that actually works for our people. And this is the story behind outcomes, really. So back then in 2016, 2017, I founded Raven Indigenous Capital Partners. So the first global Indigenous-led VC firm, venture capital firm. We did 2 funds, had a couple business partners, a First Nations and a non-Indigenous business partner at the time. We scaled that up to do a couple funds, Canada, the US, and is doing what I call pure venture cap work, right? So if you think venture capital deals with enterprises, it deals with businesses and the thing that they're making, the service that they're providing and how they want to scale that. And it's driven by a certain sort of economic and financial reality. As patient, as flexible as we could make it, there's still some realities behind the model. Approached by communities to say, look, we really want to solve self-determination of Indigenous clean energy on our reserve and reform our housing. So this is an issue that's generally been in the bailiwick of governments, right, of statutory responsibilities. And I was approached by a number of foundations and Indigenous communities who'd been working on some geothermal work and got stalled. They'd done like a $10 million worth of geothermal work and then got stalled out by the federal government. And I, at the time, was working in a process with a bunch of folks and said, you know what, the capital is just flowing in the wrong way. The wrong people are responsible for doing the wrong things on the capital stack. So it's not working for the community. And the community is always left trying to pick up the bag. There's never enough capital to do the things that you want. And so I guess I kind of wedged myself into doing something I didn't anticipate. So on the side of my desk while I was doing venture capital investing, I started building what would then become the first community-driven outcomes contract in Peguis First Nation and Fisher River, sort of in central Manitoba, to do 125 housing retrofits and geothermal unit installations, which, to be honest, they were doing these at the pace of about 1 or 2 a year on different reserves across Canada. And so we did the 125 in just over 2 years. COVID started to get in the mix, so some things got slower as we went through it. And that turned out to be successful, really successful. And then my phone really started to ring. And not from where I thought it
When
was.
you say successful, how are you measuring that?
In a couple ways. First of all, we installed 125 units and retrofitted 125 on reserve housing. So this is a housing owned largely by band councils, right? Very little private ownership at the time, or and still is, as you know, the legal situation in Canada on res. But so we have this like trailing issue in Canada of housing stock. We don't have enough houses. We really don't have enough on reserve. And so you have multifamilies and dwellings, and it's really tough on the housing stock. It really beats it up as well. So you're not getting it, even though there's government programs in place to somewhat address, it's never enough and it's never timely and it's never done in a way that the community can really access it. So success looked at doing it, hiring local people to have HVAC level jobs and management jobs because they would actually manage it. It would be direct investing in the community. It would be reducing energy bills by 50%, reducing greenhouse gas emissions, and increasing the longevity of the housing stock by at least 2 to 3 decades, if not more. And we're in the process of measuring how you get to that. So you had all these combined impacts. So you have outcomes, but then you have direct impacts for the community as a whole. And then there's all kinds of tertiary impacts that would emerge, right? So houses that never had air conditioning all of a sudden got air conditioning with you. So things are starting to kind of change at the community level. Even like things that you don't think about at first, like and councils are on block funding. So they're funding all this stuff under one single block of funding from the federal government. So if you reduce housing costs, so energy, for example, to 50% of what it was, they save that money and then can put it in education or childcare or whatever they want. So there's a tertiary effect on the local economy as well. So a bit of a long-winded answer, Rob, to your question, but there's a
No,
lot of
great answer.
and we paid investors back 4% on that one.
I was going to ask, yeah, from the investor's perspective. Wow.
And we did 4% because at the time, I didn't really understand what the market was going to be. So we're sort of market building. And we're like, well, let's not give egregious returns and then have everyone rush into it like an AI gold mine and throw money at it, because that's a problem from past Indigenous communities. So let's kind of take a stepped approach, a staged approach to it. But the investors were happy because they were taking a risk on something that hadn't been done before. And it paid it back in, just under 3 years.
Love the fact that you got the community involved too, and a bit of ownership of the resolving and solving the problem. It wasn't just putting money and hiring contractors to come in and retrofit and then leave. It sounds like it was community involvement all the way through.
Yeah, one thing I would say about that is those skills and that body of workers then went on to do other. So for example, in Fisher River, they went on to put geothermal in the gym, the car wash, the laundromat, and then the big school that finally got. And it was their workers who did it. So this self-determination piece becomes critical in the long-term trajectory of the community. Because we had a leaky bucket economy before, right? As you said, Rob, contractors would come in, but the real profit poured out after the work was done and none of the skill was left over. So we're trying to solve for that at the same time.
Yes. What about the investors who secured that return? Can you describe what type of investors did you have?
Yeah, those early investors were not your big institutionals, of course. They wouldn't do that. It was family offices, high net worth individuals, foundations, community foundations as well came on board. Those were the ones who said, yeah, we need better outcomes. And so we're not talking, I think the first investment pool was just shy of $5 million for that, right? And so we're not talking it's not insignificant, but it's not huge.
Correct.
And so most of those later on became investors in our first fund. So they had a great experience and then kind of laddered into. We can talk about the fund after.
Yes.
And what money funds the repayment? He said investors are repaid with interest if money is going into the retrofit.
Right. So the way that it works is the repayment, or what I call the outcomes purchase, or in financial terms, Rob, a takeout buyer is a good way to think about it, is so different levels of government. And so in this case, it was the federal and provincial government. So what we end up doing, and in every single outcomes contract we've always had stacked outcomes purchasers. One of the reasons, well, we can get into that. So they have programs that they have put in place to do some of these sort of work with very low take-up and very inconsistent take-up. And for a variety of reasons. One is, I think, the relationship capital you need to work in Indigenous communities and to work at scale. And so everything that was going on before was just one-offs. One house would have, I think an example is helpful for your audience. You're on Fisher River First Nation, you want to put in a geothermal system in your home and do a retrofit of the house. And you kind of need to do both. Like it doesn't make a lot of sense to do a geothermal system. You're producing great energy, heat, and then have it go out doors and windows and rooms and things like that. So previously what you would have to do is you would have to apply as an individual home tenant or as the First Nation on an individual home So just think of the paperwork that starts to ensue
Just crazy.
here to someone like the Canadian Mortgage and Housing Corporation and their Section 95 programs, and to a provincial entity. So in Manitoba, that's Efficiency Manitoba, which came out of Manitoba Hydro, but this is a self-standing body now. And they have subsidies, rebates, and full-on granting at times to do this work. But the problem was it was never coordinated. And that you, the home occupant, would have to put out a typical geothermal system, geo-exchange system would probably cost nowadays $31,000. So you could take out of your pocket $31,000. And think of what we're talking about here for an economic situation on RES. It's just not. So of course you're doing one or two a year, if you're lucky.
Of course. Yes.
And you'd have to fill out all that paperwork and be adept at doing it and hire the contractors and make it all happen and then get approval from the housing authority. So that's what the problem you're kind of solving for. So we come in and said, we're going to do 125 in just over 2 years. People are like, whoa, like we've never.
Absolutely.
So folks like CMHC, and kudos to them, by the way, they were extremely great to work with. And so is Efficiency Manitoba, said, can we please work at scale? Let's do lots. And so Raven ends up being the relationship interlocutor and the capital provider at the front end. And then governments use their statutory programs and other things, and we pool the capital and act as an outcomes purchase upon verification. So hopefully I didn't confuse that too much for everybody.
No, not at all. And just for our audience, CMHC is Canada Mortgage and Housing Corporation. So really good to bring things together like that, because that's what happened. There are good initiatives, there are good programs, but when you're doing them one by one, I mean, on a reservation or not, 31,000 is a lot of money, and the paperwork, we all know it's just a nightmare. So when you can do it at scale, that's fantastic. And then you built the reputation for your first fund.
Right. And I think the capital we managed to pool kind of on a per home basis was probably about 70,000 per home. So that ends up being a significant retrofit.
Yes.
And, you know, it has health implications too, because you're removing black mold and you're getting airflow. And so all these implications that kind of fall from it. So I think that's what got people excited.
Yes. And then you change the community, what it is to grow up and live in that community, because all of a sudden it's gone from terrible housing conditions, right? Your housing conditions start to be good. Then you have time to concentrate on other things because you're not just fighting to survive, right? You're thinking, okay, how can I grow and develop? And as you said, you brought capacity and capabilities into the reservation where none existed before. Now they have these opportunities to go around. How can we make our community even better, even stronger?
Yeah, and we've seen that. And, you know, some of the unintended, call it consequences or benefits where there's a story of an elder in the community had her house. One of the first one, the community usually prioritizes the elders, by the way, to do the houses first, because we let them prioritize what's going to get done. She said, hey, I got air conditioning in the summer. So now what's happening is all the grandkids are coming over and their friends, and they're hanging out at grandma's house. And what happens is then grandma starts telling stories. And of course, storytelling is transmission of traditional knowledge. So there's a cultural impact too that kind of occurs ancillary to the direct benefit of, I don't know, getting 4% return on your investment or putting a geothermal system in, which is where the exciting part happens, which is what I mean being closer to the impact, which I love personally. That's why we do the work.
Does that particular program continue?
Yeah, it does. It continues in the fund. So maybe I'll just, and it's matured, which I think is important. If you're talking about market readiness, it's a maturing thing. So what year is it? 26 now? So we put the first fund together, Raven Outcomes, Indigenous Outcomes Fund 1, which is targeted as a $50 million fund. We raised the first 20 million. So late 24, so fall 24, raised the first 20.4 million. And then next week, we'll do the second closing at 33 million, going to 50 million by the end of Q2. And I can say that momentum and interest from investors has picked up radically. So that's good. But when we put the fund together, we already had interest from communities and from outcomes purchasers. So the question was investors. And that actually happened fairly quickly. I think people saw what it was. It's a new investment vehicle in a way. So once we got over the first hurdle with explaining it, we're now moving from what I would say foundations, family offices, smaller financial institutions into the institutional institutions. It's a lot of institutional words here, but if you get my drift on where that's headed. And so we're starting to see the ticket size go up on investors coming in. Now, what it led us to your question, Rob, where it led us is we did a early investment in Sioux Valley Dakota Nation, which is 25 units. And we warehoused that deal before the fund closed and then brought it into the fund about 3 months later because they wanted to do work. And you're still dealing with construction seasons. Manitoba is particularly cold. So, and then we signed a second deal at Broken Head, Ojibwe Nation for 100 units, about a $7 million investment. And we have another investment in Onion Lake in Saskatchewan and Alberta. Now, Onion Lake is different because it's home solar and retrofit. And we're agnostic on the energy source or what that is. We're just interested in the impact in communities. But it also crosses the Alberta-Saskatchewan border, the First Nations across the border. So you're dealing with two provincial entities and the federal entity. So it's slightly more complex, mostly for us in doing it. But and then we have one in Ontario that's pretty much ready to go. Another one in northern Manitoba, then one in Quebec that we're in Ganawagi that we're looking at. So that stuff's moved fairly rapidly forward. And I'm excited. I'm excited to get going on it. So
it is exciting. In 2023, Jeffrey Sear and his team at the Raven Indigenous Impact Foundation, working alongside the Sorensen Impact Institute at the University of Utah, released a report, The State of Outcomes-Based Finance in Canada, which we're now going to talk through in detail. It provides a critical overview of the OBF opportunity for Canada compared to its peers. The key feature of outcomes-based finance is the alignment of financial incentives with positive social outcomes. Investors provide the upfront capital required to deliver, taking on the financial risk. If the predetermined outcomes are successfully achieved, the government pays for the results. The investors will then receive their capital plus a return on their investment. This structure not only encourages a focus on effective evidence-based interventions, but also provides a mechanism to pay for results rather than simply for services delivered. Globally, outcomes-based finance, OBF, is already proven. It's been many years since the first social impact bond was launched. In Canada, outcomes-based initiatives have been successfully launched in Nova Scotia, Quebec, Ontario, Manitoba, Saskatchewan, and British Columbia. In terms of focus areas, workforce development is the most covered area, with 6 OBF contracts structured in the recent past. Other focus areas have included education, environmental, social welfare, health, and criminal justice. In recent years, there's been a noticeable increase in the number of environmental-related OBF contracts, all of which have been Indigenous-led. Consistent success factors across projects are numerous: strong data collection and management, political champions, central coordination, capacity building for service providers, durable stakeholder partnerships, adaptable contracts, and most importantly, alignment between purchasers and communities. There are challenges with the OBF model, which is not widely understood in Canada, of course, around the globe. Integrated into policy and procurement is challenging. Measurement can be complex. Leadership turnover can also slow momentum. However, what is clear is it delivers results. So as Canada goes through this transition, outcomes-based financing is emerging as a credible and proven alternative. The potential is strong. The ecosystem needs to be strengthened. OBF has already attracted hundreds of millions of dollars in capital. According to publicly available information, the UK leads the OBF market with over 90 transactions. worth about $100 million in terms of capital. In the US, although there's been fewer number of transactions, approximately 25 at the time of the report, it's attracted over $200 million in capital. Canada's initial efforts have been primarily driven by the Manitoba Social Innovation Office, SIO, and a select group of other practitioners in recent years. The implication is not that Canada lacks the capability. The implication is there's a huge opportunity in front of Canada and all Canadians to apply the OBF model successfully from C to C to C. So if we look at the number of OBF initiatives internationally versus where Canada's initiative has been focused, we can see workforce development, social welfare dominate the initiatives in other geographic regions. However, in Canada, the mix is slightly different. That's partly because we're just getting going in OBF in Canada, and we're looking forward to the work of Jeffrey Sear and his team at Raven to drive this model across the country. But you can see Canada has had a lot of focus on workforce development, and then rather equally distributed against other types, such as social welfare, health, education, criminal justice. But want to reinforce in Canada, something very unique is those environmental and agriculture projects are primarily all Indigenous-led. So I'm sure over time, this picture for Canada will change, may match with its peers globally, but it demonstrates the opportunity in front of Canada, but also in front of the Indigenous peoples of Canada to use this model to achieve their rightful place in Confederation and in the development of the country. Thank you to Jeffrey Sear for sharing his insights with us, and thank you for viewing and listening. Mark your calendars for the upcoming 2026 summit taking place on the 8th of April. Be sure to share, subscribe, and leave a review on your favorite podcast channel. Thanks for listening to Drumbeats. Until next time.